Hey guys, welcome back to Business Lunch. Now, a big news story today is the move that we've seen on the rupee. It opened at a record low today of around 82.2 versus the dollar, and then it's only dipped further today. Right now, it's currently at around 82.4. So Lata is here to tell us more about the factors impacting the rupee move as well as the bond yields. Lata.
Well, no surprises that the rupee is under pressure. It's a double whammy. We have seen both crude prices and the dollar strength pressuring. It usually doesn't move together. When the dollar strengthens, commodities weaken a bit. But crude is rising for its own reasons because of output cuts announced by OPEC+. And that's, a good 9%. If you looked at the October 2nd, last week levels, it was ruling at about 86 and change, and now at 94.20 thereabouts per dollars per barrel. The rise is substantial. The other set of people who are buying are those who probably went short dollar, anticipating that India will get included in the bond index and there will be dollar inflows. So those short dollar positions are also getting covered now that that inclusion is not coming. The big buyers, dealers tell us over the past 2 days have been oil companies. The Reserve Bank is supplying dollars, but it is not trying to move the exchange rate. It's apparently looking like supplying only where the demand is, or at the level the demand is. Actually, the Reserve Bank would be happy with a gentle depreciation of the currency because the trade deficit, especially with China, is pretty wide. And the Indian rupee has appreciated versus the yuan. So a depreciation would be welcome. What the Reserve Bank fears more is depreciation anticipation, not depreciation itself. Dealers are talking about 82.50 as possibly the next level where a defense may come, and 83. But these are just wild guesses, There's always that expectation in round numbers like 82.5 or 83 where they expect the Reserve Bank will come and support. Just a word on the bonds. The yields have gone up. They've been going up continuously for the past 2 or 3 days. Again, for the same reasons, anticipation of bond index inclusion not coming through. I mean, now it is confirmed. The dollar index, crude prices moving up. And finally, US yields also moving up. So everything is pointing to higher yields. 7.5 is higher than the highest point in September. The chances are that it can even go to 7.62, the 10-year yield, which was the highest we saw in June.
All right, Lata, thanks so much for getting us all the details, and all eyes would be on the rupee movement going forward as well. But another important